Maybe one of the first trends that we have observed over the recent years is the growing demand of ETF. We have seen strong inflows, probably for cost reasons. Investors have a lot of pressure, especially fund-of-fund portfolio managers have a lot of pressure on the total cost of their fund-of-fund, and they have to include more and more these strategies. The other trend observed also that we can connect to flow, but in this case to outflows, is the ESG one. We had strong focus after 2018 in ESG products, but recently we see some shifts, some strong outflows also over the last years, or at least some outflows. Probably linked more to performance reasons. I think we are not changing. Indeed, we are. The idea is to continue to be diversified in order to mitigate risk. So mixing equities, different regions, different sectors, fixed income, also liquid alternatives. We have a preference towards market neutral, both in equities and in credit. So I think, yes, the most important is really to have a diversified approach. In terms of investment process, how it has evolved over the last years, I think regarding the criteria we take into account, ESG, for example, definitely was not something that we were taking into account when I started doing this 20 years ago. We talked about governance, but we never look at other aspects. Now it's completely part of the selection process. We have also access to more data, so we can crunch more data. And this is also, I think, adding something to the fund selection process. We will continue to look for all the asset classes, all the products. So we will continue to scout the universe. Maybe what I'm seeing more demand in this regard, it's more from client base or linked to new regulations, is maybe semi-liquid. Because some governments launched some initiatives that support this mix of private and liquid assets. And I'm seeing also the theme of AI, because it impacts many industries and sectors. So definitely there is some opportunities to do in this space.